Are you a young freelancer who's earning enough to get by, but struggling to save for the future? If yes, then you're in the right place to learn how to manage your money and avoid financial stress down the road. Meet Jack, a 29-year-old freelancer making about $50,000 a year. Despite his decent income, he's wondering how to start saving money. To get some guidance, Jack turns to his friend John, a freelance finance expert. Jack explains his situation. He used to contribute to a 401k as a corporate employee, but now as a freelancer, he's unsure about saving. His regular expenses include $800 for rent and utilities, $200 for student loans, plus groceries and his phone bill. Sometimes money gets tight, especially with irregular income, but he still wants to save a few $100s a month to feel more secure in the short and long term. John shares some wisdom with Jack. Switching to freelance work full-time brings a mix of excitement and fear. When things go well, it feels awesome to be your own boss, free from corporate hassles, and in control of your time and future. The best way to make freelancing work in the long term is to build up savings to protect yourself in hard times and when you just need a break. Freelance burnout is real. Many times you do not get payment on time, but that doesn't mean that you shouldn't take it anyway. Though saving is hard to do, especially when your income is unsteady and vary from season to season. But once you get started, all you need is a plan and some patience to save money for the future. According to Rafael Espinal, the executive director of the Freelancers Union in New York, to start, carefully go through your current spending. The number one thing that any freelancer should do is to check that what expenses are essential for them to do their work. He further adds, then check, what are you paying for that you don't need for your job? You don't have to severely reduce your budget, but it's crucial to know the minimum amount you need for your living. From there, you'll need to think about saving for 3 different buckets. Number 1. Your taxes. Number 2. Your emergency fund, and Number 3. Your retirement savings. Taxes for freelancers can be higher than you think. Put aside around 30% of each freelance paycheck for IRS payments. It's tough, but it's necessary. Put it in a separate bank account that you don't use for anything else, Espinal says. Not to freak you out, but you'll also need to pay those taxes on a quarterly basis. Failing, or, more likely, forgetting, to do so can result in penalties at the end of the year, explains Katie Brewer, a Dallas-based certified financial planner who has worked with many freelancers during her 15-year career. Look up the schedule, create calendar reminders for yourself, calculate how much you owe, and pay online, she says. Now, the positive aspect of these taxes is that you can deduct a lot more than you could as a salaried employee. Keep track of every expense that somehow contributes to your work. That could include the cup of coffee you buy to take a meeting, your laptop, your cell phone, your travel expenses. Save receipts and keep track of those transactions so that you can write them off as a business expense when you're filing your taxes at the end of the year. Don't rely on this saving you a ton of money, but it will hopefully result in a slightly larger tax refund than you would get as an employee. For any business-related expenses, get a separate credit card or debit card that's linked to your work bank account, just to keep them all in one place. Now let's calculate our all expenses of the month. Say you make $50,000 a year, about $4,100 a month. If you set aside 30% for taxes, that is, $1,230, you've got $2,870 left over. If your baseline living costs, rent equals $800, student loan bills equals $200, internet, phone, transportation, groceries, health care, and other essentials add up to around $2,200 a month, then that gives you about $670 left over to save. Of course, the numbers will never be always the same. But it's a start. Saving is a real possibility. Now, next question is how much to save for emergencies and work lulls, versus how much to invest for the long term. Ideally, everyone should have about 6 months' worth of living and working expenses set aside for a rainy day, especially freelancers, given how inconsistent their income stream can be. This might seem unrealistic, though, so focus on hitting at least 3 months of expenses at first. If your baseline cost of living is $2,200, then your 3-month emergency fund goal would be $6,600, that would take you about 10 months. Which is a long time, and you will hit setbacks, but doing whatever you can is the point here. Once you've got 3 months' worth of emergency savings, then you start contributing what you can to a retirement fund as well. Yes, I know it seems crazy to save for old age when you're just trying to get through your 20s in one piece, but investing even a small amount now is much better than nothing. As a freelancer, you have 2 options for retirement accounts: 1. A SEP IRA, 2. An individual 401k. Each is subject to slightly different rules and limitations, but both are probably fine for your purposes. Don't overthink it. Just open the account and put in $100. Doing so will enable you to invest for the long term and save money on taxes in the meantime, since any money you put in those retirement accounts will be deducted from your taxable income. Lastly, manage your money like you're running a small business. Keep your work and personal money separate, and pay yourself a salary like company gives to its employee. You can even set up an automatic transfer from your work account to your checking account, just like a normal paycheck. Remember, you are your own small business owner, with an employee of 1. This helps you stick to your budget and save money consistently, even if your income goes up and down. After having all this conversation with John, Jack felt really excited and said, "Now I understand. To save money I have to budget my every penny so that I do not spend extra money, though it looks difficult, but I will try my level best to save more and more so that I can become financially strong in the future."